In this video, let's briefly go over how to trade S&P 500 index credit spread option on platforms such as Robinhood.
First, browse SPY for S&P 500 ETF.
Once you go to the SPY page, you would find Trade button on right bottom corner, and you can tap on it. You will see Trade Options or Buy. Since we want to trade option credit spreads, choose Trade Options. You will see set of different option strategies as well as different expiration dates shown on the top. Scroll to the right through different dates to find appropriate expiration date. For this video, I would choose April 24th. Once you choose April 24th at the top, you will see options with different strike prices. Let's go over how to open call credit spread with this expiration date. Let's say I want to choose call credit spread with strike prices of $419 and $420. Then we can scroll upwards, making sure Sell and Call options are chosen at the top, and tap on plus sign next to $419 call. This will add $419 call option sell strategy. Now that $419 call sell is chosen, plus sign will change to check sign. Switch over to Buy at the top to add buy trade with $420 call. Once you switch over to Buy, you will see $419 call grays out, as you cannot buy and sell the same option simultaneously. Now you can tap on plus sign next to $420 call. For credit spread option, you want to sell option with strike price closer to current SPY price, which is $419 call, and buy option with strike price further away from current SPY price, which is $420 call. Once $420 call buy plus sign converts to check, you can proceed by tapping on Continue button at the bottom. Now, you can confirm that you are initiating call credit spread. Please make sure you chose right option strategy with correct strike prices and expiration dates. This details max profit, break-even SPY price, and max losses. Now let's tap on Review. Here, you can specify how many contracts to open, at what limit price. You can think of limit price of credit as minimum credit you want to receive per contract. Now you can choose number of contracts open. Each one contract equals to 100 stocks, so if you get credit of 0.20, then it will give you $20 per contract. Once number of contracts are confirmed, you can choose the limit price of credit to receive in opening the trade. You can input mid-value between bid and ask price, such as 20 cents as shown here. Once you are done, tap on Review. Before sending the trade request, you can review once again, and swipe up to submit request. You can go to Order page to review the status of the trade, like this screen. And if you scroll to bottom, you have option to Replace Order, to change the credit price to receive, or cancel the trade if you want to. Now that was for opening call credit spread. Let us briefly go over put credit spread, which is very similar in process. For put credit spread, you follow similar steps of choosing expiration date at the top. Here let us choose April 21st as the expiration date. Then choose Put at the right top corner. Let's say we want to trade put credit spread with strike prices of 407 and 406. First, choose Sell at the left top corner, and tap on plus button next to 407 put option. Once plus sign converts to check mark, switch to Buy at the top left corner and choose and tap on plus sign next to $406 put. Again, for credit spread option, you want to sell option with strike price closer to current SPY price, and buy option with strike price further away from current SPY price. Once both Sell $407 put and Buy $406 put are chosen, tap on Continue at the bottom. Make sure that it shows up as Put Credit Spread with right strike prices and expiration dates. It will show you max profit and loss potential per contract. As was shown in call credit spread, this would be max 14% return trade with $100 collateral per contract. Let's tab on Review button. Then you can select number of contracts, limit price of the credit, and tab on review again. Before submitting for trade, you can review again to make sure how much collateral would be, and what would be max credit or profit you can earn from this trade. Now let us go over how to close the position after opening the trade. Suppose you opened 406/405 put credit spread. If stock price remains relatively stagnant and volatility decreases, your option credit spread will become worthless, and you can earn max profit. You don't have to do anything and just let it expire. But in case you want to lock in gains early, or take loss early to prevent further loss, you can click on the option, and then choose Close. Then, you can designate number of contracts to close, at what option spread price. Once you set number of contracts and at what price to close, you can tap on Review. Once closed trade order is placed, you can replace the order to change limit price or even cancel. Once the closed trade is filled, the app will show when was it filled at what price, as shown here. Option trading is highly risky, and this is why you need to apply for special access to option trading within the platform to enable option trading. Before you initiate option trading, make sure you study and research fully on the risk involved in option trading. Again, this is not investment advice, and I am letting you know only for educational purposes. Please trade at your own risk after thorough research and study. Thank you for watching. If you found this helpful, please feel free to follow me at Option Empower.